All eyes are now on the US and the all-important non-farm payrolls report as we come to the end of another trading week. Joining me now to discuss jobs, growth and the housing market is Girard, Senior Economist at RBS. Michelle, the US recovery appears to be gaining steam, supported by a marked improvement in the jobs data, although there's also doubts as to whether this recent strength of recovery is sustainable. What are you expecting from this week's NFP report, and what is it that seems to be driving payroll growth at the moment?
We're looking for a gain in headline payrolls of 230,000, which is pretty close to the consensus forecast, and it's really also in line with the increases that we've seen on average over the last 2 months. We continue to expect that the labor market strength will again be reflected in February. In terms of what's driving the sudden sort of burst in hiring that we've seen through the turn of the year, I think twofold. I think certainly businesses have extracted as much work, productivity gains as they can from their current workforce, and so many are in a position where if they want to increase output, they're actually forced to hire more employees. And I think, that fact combined with the truth that the business sector is more confident about the economy and the outlook, I think those two things have combined to encourage firms to actually pick up the pace of hiring this year.
At the same time, I understand some are slightly sceptic as to whether the current US growth rate can actually sustain a faster pace of hiring.
We've been down this road before. In both 2010 and 2011, the economy started the year on a very strong note, and then the momentum faded and through the spring, and by the summer we were worried about a double dip, and I think there's some concern that maybe that pattern repeats. In addition, we've had a very mild winter, and there's some question about the degree to which the data are being boosted by the warm weather, and then also there's just the risks associated with obviously the Eurozone, as well as the recent run-up in gasoline prices. There's some concern that as we move into the spring, those forces could work against the economy, sapping some of the recent momentum.
Alongside unemployment, problems in the bleak housing market is another significant factor continuing to hold down the economy. We've seen almost no recovery in housing since prices slumped back in 2006, and house prices are down around a third from their pre-crisis peak. Now, there's mixed signals regarding the housing market, but do you think the housing market might have seen the worst already?
I do. I'm actually very encouraged by the recent data on the housing sector. Really through the fourth quarter of 2011 and into early 2012, we've seen a broad-based pickup in most of the housing measures. Housing starts have improved, as well as home sales. Home builder optimism is at its highest level since since before the home buyer tax credit was introduced in 2009. And even in terms of home prices, as you point out, the overall figures have continued to be disappointing and are down. However, if you strip out the impact of distressed sales, those are sales that on foreclosed homes or short sales, you're actually seeing, we saw an increase in January on a month-over-month basis, and year-over-year the numbers are closer to flat. So I do see encouraging signs in the housing sector. I do think it's turning. I do think the improvement will be gradual. We still have an enormous amount of inventory to work through. But I would say that I'm confident that perhaps the worst is now behind us.
With heightened tensions with Iran over its nuclear program, analysts are divided over whether higher fuel costs will undermine consumer spending and economic growth, or whether the economy is strong enough to absorb the higher prices. How concerned are you right now about high oil prices, especially if tensions with Iran were to escalate?
Yeah, I'm very watchful, and people have made the point that gasoline may have superseded now the Eurozone crisis in terms of the near-term threat that we're watching in terms of the U.S. economy. At this point, I'm encouraged by the resilience the U.S. consumer has shown. For example, auto sales in the month of February, despite the run-up in gasoline prices, were the best that we'd seen in 4 years. So I do think that consumers are showing resilience, in part because we're actually seeing better income growth as the employment situation has improved, and that, of course, gives us a little bit more of a cushion. But I certainly would become much more concerned if we continue to see gasoline prices rising to $4 or $5 even a gallon. As people are talking about some parts of the country here, I think that is something that would sap the consumer if it wasn't quickly reversed.
Thank you, Michelle. As always, it's a pleasure speaking to you. Now, to finish off the week, we'll have more interviews, a press review, and as always, the market outlook for the week ahead. Goodbye for now.